Hello everyone. In this video, we'll be discussing composite and mixed supplies under the GST law. Let's begin. So, what are composite and mixed supplies? When are they relevant? And what is the historical background for these provisions? So, it can so happen that in normal course of business, a person may provide you two different supplies. That is, he can provide you either two different goods or two different services or a goods and a service together as a bundled package. This can happen in many business circumstances as is being done normally. So, when this happens, for the purpose of levying GST, for the purpose of levying tax under the GST law, you need to determine which of these will be the essential character of that particular supply and how to tax it. That is, how to classify this transaction and what is the rate of tax you need to apply for this transaction. That is why this concept is coming into the picture. Now, the historical context for this concept is earlier under the service tax regime, also after the negative list in 2012, Section 66F was inserted into the Finance Act 1994. The Section 66F of Finance Act 1994 contained the principles of interpretation in relation to bundled services. Concept of bundling was introduced after the negative list. What it meant is that when two or more services were provided together by a service provider to a recipient, such that they are so bundled either naturally or unnaturally, the provision gave you the principle on how to classify that particular service and what rate of tax had to be charged. It said that where these services were bundled naturally in the ordinary course of business, you take the service which provides the essential character for this activity and then tax it as that particular service. Wherever it is not in the ordinary course of business, it's not naturally bundled, then among these services, whichever is the service which attracts a higher rate of tax, take that service and treat the entire transaction as that service only. This is what was the logic behind the erstwhile provision under service tax regime. The same concept has been rebranded and applied under GST law with respect to both goods as well as under services. This is what is composite and mixed supplies. Let's look at composite supply now. What it says is Section 2, subsection 30 of CGST Act is the section which defines composite supply. According to it, a composite supply means a supply made by a taxable person to a recipient consisting of two or more taxable supplies of goods or services or both, or any combination thereof, which are naturally bundled and supplied in conjunction with each other in the ordinary course of business. One of these supplies is a principal supply. So this is the definition. What it says is that, let's break this definition down. So a composite supply is a supply made by a taxable person to a recipient. So these are the two parties involved in this transaction. And this supply consists of two or more taxable supplies. It's not just one supply, it must consist of minimum two taxable supplies or more also. It can be infinite number of taxable supplies being done together of either goods or services or both. It can be two goods, it can be two services, or it can be one good and one service being bundled together, or any combination. Likewise, you can apply all types of permutation combination. It can be one good, one service, two goods, one service, one good, two services. However, you want all good permutation combination, apply it together. If it contains minimum two supplies, it becomes a composite supply when these are naturally bundled and supplied in conjunction with each other in the ordinary course of business. Remember, I told the natural bundling concept under the erstwhile service tax law. Same concept is what is being applied here as a composite supply. So, when it is naturally bundled and supplied in ordinary course, such that one of these multiple supplies is a principal supply. That is the supply which gives the essential character to that transaction. So, what is principal supply? Again, principal supply is defined under section 2, subsection 90. It says that principal supply means the supply of goods or services which constitutes the predominant element. Likewise, what had earlier been in service tax as the essential character, here in GST it is worded as predominant element of that composite supply, and to which other supply forming part of the composite supply is ancillary. So when one is predominant, the other one has to naturally be ancillary. That is what is mentioned here. So when I provide two or more supplies together, one of them will be the dominant supply. All the other supplies forming part of that composite supply are ancillary, such that they are naturally bundled in the ordinary course of business. So when such a transaction happens, how do you treat it? That is being provided under section 8, subsection A. Section 8, clause A. What it says is that when a composite supply comprising two or more supplies is being provided, one of which is a principal supply, then it shall be treated as supply of such principal supply. The same provision what existed in the earlier service tax regime. When it's a natural bundling happens, take the service whichever gives the essential character and tax it as that. Same provision is being copied here and says that when the composite supply takes place, that is a naturally bundled in ordinary course of business. When that happens, whatever is the predominant element, which is the essential character back then, same predominant element right now, which is the principal supply, tax this entire transaction as a principal supply only. Ignore the remaining ancillary supplies. Do not worry about them. So this entire transaction should be classified as the principal supply. Whatever is the principal supply, classify it as under that HSN code, and whatever is the rate applicable to that principal supply, apply it on the entire value of consideration received for this composite supply. That is what it means. Let's take an example to understand this better. Let's say I want to buy a TV. So I go to a showroom, I buy a TV, or I buy it online itself. Now, in majority of the cases, not majority, all of the cases, the manufacturer provides a warranty. A warranty is basically an undertaking by the manufacturer saying that during this minimum period after your purchase of my product, if it has any defects or undergoes any repair, I will come and make good the defects for you. That is, I will come and repair it and restore it back to its normal state of functioning. So that is what is meant by warranty. It is a service because the person undertakes to do some activity for you. So it is a service. Whereas when I buy the TV, that transaction is a sale. The other person sells his TV to me, sells the property in that TV to me by making a title transfer. So that is a sale. So these are two supplies, two different supplies. One is a sale of TV, another is provision of warranty. One is goods, one is service. Both are being bundled together and provided to me as a package for one price, whatever I'm going to pay. I'm not going to bifurcate. Even if I bifurcate also, it is being provided to me as a package. So this is how it is. When this happens, and this generally happens as a normal business practice, all over the world even, whenever manufacturer sells any product, they provide a inbuilt manufacturer's warranty for a certain minimum period, 1 year or 2 years or 6 months as the case may be. When that happens, this is in the ordinary course of business and supplied in conjunction with each other. That is, one supply is related to another. The warranty is related to the TV. In conjunction with each other, they are supplied as a natural bundle. This transaction is a composite supply. That is what it means. Out of this, now if you ask me what is the principal supply, I'll ask you what is the predominant element. So let's see. My intention when I undertook this transaction to buy a TV is that I must get a TV. That is, procurement of TV was my intention. I did not intend to procure warranty. The warranty would be useless without the TV for me. So my intention was to buy the TV, which is the predominant element here as per in this composite supply. The manufacturer's intention also is not to sell the warranty, it is to sell the TV. Ancillary to that or incidental to that, he provides me a warranty. He cannot individually just give me the warranty. Without the TV, the warranty doesn't make sense. His intention is to increase the sale of his TV by giving a warranty. An additional warranty is an additional facilitator for the sale of TV. That is how the intention is. So, the predominant element being the sale of the TV, this whole transaction will be considered as supply of TV, supply of goods. And whatever is the rate applicable to the TV, GST rate, that will be applied for the entire consideration what is being paid towards this procurement of TV. That is the underlying concept of composite supply. Next, we'll see what is mixed supply. So far we saw natural bundling in ordinary course of business. Remember, I also told you bundling which is not so natural in ordinary course. That was also there in the erstwhile service tax regime. I mean, one is if there will always be two extremes. If one extreme is there, the opposite extreme will also be there. So natural bundling is there, unnatural bundling will also be there. For the sake of convenience, most of the time businesses in business, people generally bundle together certain goods or certain services or goods and services, any combination as a package to try and sell them or market them as a bundled package to have some advantage, be it to have a better market reception or sell more products or make more revenue, whatever be it. They do it for certain advantages. Whether each of these items cannot be procured separately or they are generally to be bundled together, the answer is no. If the answer is no, then it becomes a mixed supply. That is an unnatural bundle. So, section 2, subsection 74. This section defines mixed supply under CGST Act. It says that mixed supply means two or more individual supplies of goods or services or any combination thereof made in conjunction with each other by a taxable person for a single price. This is very important. For a single price. A single price must be charged for all these supplies together. There should not be any bifurcation. Where such supply does not constitute a composite supply, then it becomes a mixed supply. So, when the supply is not a composite supply, that is, it's not naturally bundled in ordinary course of business, and it is done for a single price by a taxable person, then it becomes a mixed supply. These are the two important aspects of this definition. When that happens, how is it to be taxed? So that is contained in provision 8b, section 8, clause b. What that says is that a mixed supply comprising two or more supplies shall be treated as the supply of that particular supply which attracts the highest rate. Remember, I told that in case of unnatural bundling under earlier service tax regime, they identified the supply, a service which attracted the highest rate of tax, and then that rate would be applied for the entire consideration. The same concept is applied here under mixed supply. So, where for the sake of convenience, I am bundling two or more goods or services or goods and a service together, and it is not at all naturally bundled in ordinary course of business, but I am doing it just for sake of my convenience or promotion or whatever advantage I perceive. Those supplies are mixed supply when they are supplied for one single price, and I have to identify each and every independent supply within those supply, and then whichever one of them attracts the highest rate of tax, that rate of tax I will apply to the total consideration. To understand this better or to simplify this, let's take an example. If I were to buy a toothpaste, and sometimes in market people generally, toothpaste manufacturers generally make an offer that if you buy this toothpaste, I will also give a toothbrush free to you. It's not free, the price is also built as a part of the bundled package, but still it is being done for one price. So when that happens, is this a natural bundle? No, it is not. I can easily buy a toothpaste separately and I can easily buy a toothbrush separately. My intention is not to procure them together. I just want to buy toothpaste. But the manufacturer also markets this as a package such that I can buy both of these items together for a convenient single price. When this happens, these two unrelated products which are not naturally bundled in ordinary course of business are being provided as one single package, one single supply. I am supposed to identify the independent supplies, which is the supply of toothbrush and the supply of toothpaste separately. I am supposed to find out which of these attracts the highest rate of tax, and that rate of tax I will apply for the entire consideration, and the transaction I will classify as that supply which attracts the highest rate of tax. So if suppose toothpaste attracts 5%, toothbrush attracts 12%, I classify this as supply of toothbrush, and then I will put 12% tax on this. I'm just saying these are not the actual rates, I'm just saying for an example. So that is this concept. So having seen what these two concepts are, how do you determine how do you differentiate one from the other? How do you make sure when two or more supplies are being provided together, whether it is a composite or a mixed supply? There is no concrete procedure for the same, but certain indicators are there. Like for example, you can definitely see and identify if it is a normal business practice for bundling these two supplies together in a single transaction, whether that is the case. If so, it will be a composite supply. If not, it is not a composite supply. Secondly, if the items cannot be provided separately, like I said, toothbrush and toothpaste, I can easily buy both of them separately in the market. I don't have to always buy them together. Whereas in case of TV and warranty, I cannot go and buy warranty alone separately. I mean, technically speaking, AMCs will be available, but manufacturer warranty I cannot go and buy separately without the TV. So that is naturally bundled. Whereas when I can procure the two supplies separately, it is not naturally bundled. Like some examples I can give. In case of printing industry, let's say if I am a faculty, I am developing some course material. I am developing the content for some course material. I intend to get it published as a book or a booklet so that I can supply it to the students. So my intention here is to avail service of printing. I approach a printer, I give him the content, I ask him to print it in the form of a book, print, bind, and then give it to me. So even though the printer will be purchasing paper, boards, etc., and then will be binding them together and be providing me the end result in the form of a book, which is a good. But still, what happens is that I intended to get my course content printed. My intention was to avail a service. So this being a composite supply, both goods as well as service is being provided to me. The predominant element, my intention behind this transaction was to get printing done. So the predominant element will be the availment of a printing service. So this is a composite supply with principal supply being printing services. In same printing industry, in contrast, if we take, suppose I want to buy stationery for my business, pens, pencils, paper, envelopes, etc., whatever I keep, and I want to affix my business logo on those stationery so that whenever I give it to use it with my clients, etc., they will be able to see it is from my business. For that purpose, I approach a printer. I tell them you print it. When I approach a stationer itself, they will also have their own printers. So they will print my logo and then give it to me. So in this transaction, even though the same goods are also being supplied in the form of those stationery envelopes, etc., and printing is also being done, my predominant intention is to procure stationery. It is not to get printing services. So the goods are also provided by them, printing is also done by them, but my intention was always to procure goods in the form of stationery. So that being the principal supply, this entire transaction will get classified as a supply of goods only. So same printing concept, same printing activity, two different examples and two different classifications also. So you cannot apply this logic of composite and mixed supply as a blanket rule for every activity. It has to be applied on a case-to-case basis. You have to analyze each and every single case and then see which of these concepts fits that particular case and then classify and charge the rate accordingly. Hope this was clear. In case of any doubts, please post in the comments below. I'll be happy to clarify. Thank you for watching. Have a nice day.